Good morning, everybody, and welcome. It's TheoTrade Chat. It's Don Kaufman here on this Thursday morning with the S&Ps up some 47 handles. Well, that sucks. We're well within the expected move. We're right back, ironically, now to the top of our lovely range. I'm sorry, this hoodie over here, it's choking. It's choking independent Don. The S&Ps are running a bit to the upside. One of the things I noticed this morning, the volume hasn't just died out. The really for such a significant movement in overnight trade, there's not that much volume. We'll see, which is often a little bit of a tell that maybe the move, if you will, there's not a whole hell of a lot behind it. I mean, I see Apple up this morning, and I do see, Google's got a pretty good bid under it. It's a $5 bid under Google. Microsoft's got a bid. Amazon up nominally. Tesla up nominally. Meta, okay. Meta, big move to the upside today. And finally, NVIDIA is basically kind of flat into it. So order flow, anything but certain this morning. The financials are going to rally back a little bit more, which they didn't really yesterday at all. The XLE, the energy sector, okay, is actually going to open a little weak. So mark my words, very mixed bag of goods this morning, more so than you're seeing dictated to you by the S&P futures. It's a bid under a handful, excuse me. I'm going to be choking the entire morning. It's a bid under a handful of the major tech stocks, and it's not all of them. Everything else is kind of waffling a bit this morning, kind of near the flat line. The AD line is going to open up, advanced decline line is going to open up positive, but it's not going to be, let's not get crazy this morning is what I'm saying. And strangely enough, volatility down, but minimally so. And the volatility you want to look at, of course, those volatility futures. Let's come to today's bell. As I was saying about the advanced decline line, let's not get crazy to the upside. It's definitely positive, okay, but it's not exactly like you would think. The S&P is up some 40 handles. This thing would be pegged. It's this like 70-30 crap that we've been in again lately. Ticks this morning, okay, open strong, positive 1,000 tick. But again, order flow is going to dictate quite a bit here into the cash open. Interestingly, also enough, the expected move for today is $42, $42, and we effectively opened on that. So we're still down on the week, but minimally so. I mean, we were facing a 2 standard deviation move on Tuesday. Tuesday was this week's Monday because Monday markets were closed. So we were facing almost a 2 standard deviation move on Tuesday. We have now rallied back to the point where we're almost unchanged in the week. Taking a look expressly at the QQQ, the Qs are officially unchanged now on the week. And the reason I'm bringing this to your attention early on, the stocks that could not get out of their own way over the last few months, they've got a bid back under them. And yesterday, and people are talking about the taco trade and so forth. Yesterday, it was more about a catalyst, okay, than anything. The markets were looking for anything to latch onto, and they did. You start thinking about, Greenland, and again, the point that I was trying to make, on Tuesday, it was the Japanese bond market that really caused the sell side activity, okay, to markets as a whole. Then, okay, it was literally this announcement that comes out. Doesn't matter. Nobody gives a crap about the Greenland announcement, but it was the catalyst, and it ignited tech specifically. Again, which has no bearing whatsoever. It ignites like an appetite for people to go, okay, we can buy calls again. That is that's effectively what we've seen. Now, the S&Ps, okay, are we anywhere near kind of major levels in the S&Ps. And the answer is somewhat in the S&P futures. The SPX though, and again, the SPX, as I said a moment ago, last night we kind of cruised back down, okay? And we're very close to the lower edge of the expected move. This morning with the bid back under us, we're really close to almost unchanged in the week. I mean, there's some room to go to unchanged in the week is another, 10, $15 above us. That, people, okay, isn't, like this isn't like per se a major level in here. It's, nothing burger, right? Other than there's a crap load of gamma risk in the middle over here. What is interesting though this morning is, and again, I've been bringing up this chart pretty much ad nauseum. This is the 90-day 2-hour, 90-day 2-hour. And I'm going to come in here just so we're all clear. We're going to contract adjust, apply, hit OK. All right. This range from 68.50 to 69.50 is actually kind of bring it into scope. Pretty wild, right? All we really did from last Friday to Tuesday to today, we cycled through. Once down, okay, once back up. That's it. Nothing more, nothing less. And those that are going to look into this and they're going to be screaming about bullish or bearish, just stop. Okay. It's, you want to talk about bullish or bearish, where is it? Okay. It was really, really bearish until it was really, really bullish. We're just pinging back and forth, still inside of this volatility box, caught the lower edge of it and ripped from it. And as I said to you, this, with catalysts, and you can't be shocked at this point. Okay. We could cycle right back down. And again, of course, oh no, that's like we could cycle right back down in here. Okay. The central point of all the trade has been basically 6,900. So as I said to you, like there's not, definitive levels in here. Okay. But if you want to latch on to anything, it's the idea that at the 69.50, okay, you roll back over from here. I mean, there could be some little bit more upside because we've actually traded right into, again, this 69, like 70-ish, quite a lot. That's actually where we closed kind of last Friday. It was 69.75 is where we closed last Friday. But do not be surprised, okay, to have some pullbacks throughout the course expressly of today. Again, the advanced decline line, it's getting a little bit better, and I'll tell you why the advanced decline line is getting better. Okay, I can actually see the energy sector getting a little bit of a bid. And it's so ironic because as the energy sector gets a bid, okay, then you start looking over at some of the tech stocks in here, and okay, they're not. All right, it's constant and like ridiculous, like rotations though that we're seeing. Okay, the rotations, people, they haven't died out. And if the financials are getting stronger this morning, which they look decent over here, is that going to weaken some of the big tech stocks? Okay, Meta's flying. Meta, okay, that's right here is your big portion of your gains inside of the NASDAQ. But those NASDAQ gains are fading pretty quick. Your hopes, your dreams, okay, fading with it. NVIDIA's actually come off pretty substantially in just the first couple of moments, hitting all the way to 186 and slipping back now, 184. It's $2. Check that out. $2 move in the last 4 or 5 minutes. And that's some freaking volatility in there, people. And the NASDAQ being taken with it. By the way, I'm not necessarily ready to call this like, a reversal just yet. But in fact, there's, at least for the way I trade, you can't come in at the bell looking for a reversal. Like you can come in and be like, oh, I think it's going to reverse, right? But there's no way to actually trade that. It's ding, 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 short. Like you can't do that effectively. So what I'm basically saying is if we reverse right now, sorry, I'm going to miss it. Okay. But I would rather miss this than try to hop on and get ripped apart because, the bell goes off. And I was trying to dictate to that in the pre-market. There was no contract size that traded overnight. So when you don't have much contract size, you only have 200,000 contracts trading overnight. The night before that, we traded like 360,000 contracts, right? But there's no contract size trading overnight. You don't know what the order flow is going to look like until the bell goes off. You just don't know. Okay. Honestly, like I still don't know. I mean, I can see some sell side in here, but you don't know what anything's going to look like okay, until we actually start trading. And that right there is a key differentiator of the previous, 20, 25 years of my trading career, because when, you always used to be able to look at the futures and be like, look, they're opening up, they're going to be up today, and that was kind of your day. Maybe you got a chance at a reversal like late in the day. Now, okay, now the futures could be up huge, and they fade them throughout the course of the day, like or early in the day, where the order flow overnight meant absolutely nothing. And that's okay. I think a defining feature right now of markets. And again, as I said to you, I'm not all bared up over here. I'm going to see how this thing actually plays out in early trade. The marketplace, okay, resilient, maybe. As I said, people look at this and I really, okay, and I know there's a couple of other instructors here at TheoTrade would agree with this, okay. The whole bullish bearish theme, okay, we should take out of our vocabulary, because it's sheer stupidity at this point. If you're, you could be bullish or bearish for the day. There's no bullish or bearish in a marketplace, okay? That when you say something like that, look where we've been. And I literally mean like, look where we've been. And that's always this constant argument. Look where we've been, okay? Oh yeah, I'm so bullish and bearish in here that, my mouse is actually sitting on, that's right, okay? That little mousey over there is on late November. If you want, I can get crazy. I can come all the way back here. Sure, what the hell? Let's actually go to late October. Since late October, how bullish or bearish are you? Okay. It's no longer an argument. So all we're doing right now, as I said, we're pinging back and forth, creating more open interest in a really compressed area. And if anything, the way to read this is that's really dangerous. It's really dangerous because the longer you're in the same range, okay, obviously trade gets compressed, but where it really has to do with the danger lies in the fact, okay, that any option trades, any stock trades that you put on, okay, are all allocations of the exact same basically standard deviation. So all of your allocations are just piled into one area. And most people don't realize that if there's, again, a defining feature, a defining factor right now that is going to keep me, I'm going to be grossly under allocated right now. Okay? I will be grossly under allocated. If you get frustrated because I don't fire off as many positions, screw it. I don't care. It's my money. Okay. I have to allocate my own capital when I do these trades. And when you're in a narrow band like this in the S&Ps, okay, what people always say, they go, well, Don, guess what? I'm not trading S&Ps. I'm trading Palantir. Hey, Don, guess what? Okay, I found the one stock, it's going to be Procter Gamble that's going to rally. And I'm going to tell you, okay, it all relies in the S&Ps. With the S&Ps, when they do break to the upside or break to the downside, okay, everybody's going with it. And the one aspect that you saw a glimpse, just a glimpse of it on Tuesday, is you started to see higher degrees of correlation. When you saw higher degrees of correlation, okay, when markets move big, they don't get 1, 2, 5, they get them all. And that's what you have to start to recognize is we're in this, and the markets are so good at convincing everybody of how resilient they are. And the one really shocking thing, and I was listening to some of the rhetoric that was coming in on Tuesday. Tuesday was a 2% sell-off. And like legitimately people, 2% sell-off, okay? There's your Tuesday. 2% sell-off. People were legitimately like, it felt like ready to throw themselves out of a window. And they're like, this is the greatest buying opportunity we've seen year to date. Like I couldn't tell you how many times, okay, that I heard that. I don't hear it. I actually read it. Okay. I do read everything. I don't listen to any news media on TV, but I read a lot. Although I just unsubscribed to like all these like newsletters that I subscribe to. I literally unsubscribe to them because they're all a bunch of idiots. And I'll tell you why I unsubscribed to them, because the market was down 2%. They're like, this is the greatest buying opportunity. A 2% sell-off, really? Okay. You realize that a 5% sell-off, okay, isn't even like a corrective territory. The S&P is going to move like 10%. Okay. And unfortunately, 10% of a $7,000 product is 700 S&P points. Okay. The one thing you're lost in point land. Okay, point length. You better start looking at percentages. Oh no, they were down 140. Call me when we're down 250 on those S&Ps because 250 plausible. It's a $7,000 product. Okay, you haven't had a 3% move in a really long time. I mean, 3% one day, and I think that people are they're lost right now in the woods on this, and they're going to wake up really quick, or they're going to have to wake up really quick. Okay, I am telling you that the longer you compress, the more danger there is. Okay, and I'm not going to sit here and preach to you that we're going down because I'm not. I'm not going to preach to you we're going down. But I will tell you, okay, that I have seen this type of trade so many times before, but no one's ever seen the S&Ps compressed in 100-point range for this many months. Okay, and it is months now. No one's ever seen the S&Ps compressed in this tight of a range where all the firepower that every market making firm and retail trade has, okay, is in 5 or 6 underlyings, not even 7 underlyings. There is no more, FANG anymore, right? It lost its fangs. Okay. I think that at this point, you're in, if you will, one of the more dangerous positions that we've ever been in, because you're seeing catalysts, rally us, catalysts sell us off that really don't have much bearing, okay, on what US markets are going to do. And again, everybody wants to extrapolate like the Japanese bond market and then Amazon, okay? And it's a far reach. You just got to think about, right, when we're compressed like this, it's a powder keg. And what you basically have is every catalyst that's thrown at the marketplace is just lighting a fuse, okay? And it continues to kind of ping back and forth. But you may actually make a very dramatic move without that catalyst. I think we're probably very close to that point. I would say that the bond market could be a little bit of a warning shot being fired at us. Okay, clearly you're getting warning shots fired by gold, silver. Okay, there's a lot of signs on the screen of that kind of discontent with some of your major asset classes, and that's more or less what I'm looking at is, are we starting to trade into alternative asset classes? Are we forcing capital, okay, into holes that are just being basically filled for no other reason than nobody wants to buy NVIDIA anymore? And I think that the answer to that is hell yeah. Like nobody really wants to buy NVIDIA anymore. I know they came back to life yesterday, but nobody gives a crap. Okay. Meta couldn't happen to a better stock. Oh, it's got a bid under it. But the truth be told, again, we're forcing capital into areas that boy, that's getting crazy in there, huh? A little silver. Okay. Of course, we are going to have to bring up then natural gas. Natural gas is, I told people, okay, on Tuesday, I told you, stay the hell away from it. Why don't you get bullish? Because even that trade is ridiculous. Okay. It's, this is full-fledged, squeeze is on. The squeeze is on in here. And this may not stop for a long period of time, but I'll bring this up like day in and day out because there's a lot of products I like to bring to your attention that I know from my own experience, okay, and having watched retail order flow for 15 years, I know people are like moth to the flame, okay? I also know that natural gas has taken out more futures traders than I care to ever remember. More than oil, although I have seen oil do some horrible things to people, like when it went negative $40, okay? That was awesome. By the way, S&Ps are starting to reverse a little bit here. Okay, maybe this 69.50 we pinged to the top and we're actually pulling back. I'll say this again, can't be surprised if you actually go home tonight, and the markets are right back down to 68.50 and you're like, no way, it's 100 points. Okay, can't be surprised if you go right back down to 68.50 because nobody gives a damn, right? It's about gamma risk. It's about gamma risk, okay, and lighten fuses. So the entire marketplace, one of my friends, and I talk about him all the time, Frankie Walsh, when futures first came out for like retail traders, okay, futures contracts are something that have been traded by market makers. I mean, that's why futures contracts really were there. When I say futures contracts, I'm not talking about cattle futures, I'm not talking about random length lumber. I'm talking about like S&P futures. S&P futures, okay, originally were not electronically traded. They were in a pit, okay, and it was, S&P pit. Then they actually came up with this /ES. I was the very first generation to trade the /ES, which is, the S&P, the E-mini. The E-mini was exactly 1/5 the size of the original S&P. But when you take a look at the mini, they electronically listed this, okay, and I was already at Thinkorswim I remember when we actually turned this on for retail clients, and the best line I ever heard, because the whole professional world used S&Ps to hedge. That's all they ever did was used S&Ps to hedge, right? We used the minis to hedge. And then we handed it to retail clients, and Frank goes like, "Oh, great. Look at how they're doing this. It's like they're like juggling chocolate covered hand grenades." I've used that line ever since. Okay. Futures contracts, chocolate covered hand grenades. Well, it turns out the entire marketplace is that right now. Okay. By the way, that is one hell of a reversal. This is not going to stop. This is not going to stop. They're rocketing. Okay. The volatility futures up right now. So reversal is technically underway. And if you ask where it's coming from, it looks like it's coming from the S&Ps itself. You want to sit here and be like, it's a little bit of Apple and it's a little bit of this. And okay, nobody gives a damn. Okay, no, nobody cares. No, nobody cares. It looks like it's coming from the S&Ps where the reversal is. But again, remember, overnight, some crappy volume leading to early demise over here. We're reversing though. Sit tight. Plenty of positions on right now. As I said, and I don't mind saying this, I'm grossly underallocated coming into this. Okay. I have positions in emerging markets. That one kind of sucks. My spider position's doing great. Costco sucks, but I got all the time in the world. I intentionally went further out, okay, on most of my positions. Like I intentionally went further out. Why did I go further out? Because I know in a marketplace like this, you're not going to be able to handicap the day to day. It's okay. It's got great potential though for 0-DTE. Great potential. With that, okay, I want to make a quick announcement that hit the PR wire this morning. Okay, so well, screw it. Let's make the announcement over here. See if I can actually paste this into chat. Okay. Yeah, it's in chat now. On January 26th, the NASDAQ options markets will begin listing qualified securities with the following expirations. Okay. We are now listing Monday, Wednesday, and Friday expirations. Okay. Tesla, NVIDIA, Apple, okay. iBit, which is, of course, Bitcoin ETF, Amazon, Meta, Broadcom, Google, and Microsoft. Google's interesting because it's only going to list, okay, Monday, Wednesday, Friday. Okay, it's only going to list Monday, Wednesday, Friday for Google L as of right now. So basically, the biggest and baddest of your underlyings. The only other one that has that, like TLT, if you take a look at TLT, this is Monday, Wednesday, Friday. They're expanding the pilot program, which, in my opinion, is going to concentrate liquidity even more. Chocolate covered hand grenades, people. It's going to get even more interesting. By the way, it really opens up, like when we start to think about earnings announcements and flips and expected move butterflies and 0-DTE, everything is 0-DTE. Okay. I mean, you're going to be able to trade 0-DTE now is 3 times a week, like in NVIDIA, but you'll still be able to trade it on a Tuesday for a Wednesday expiration. Crap is going to get real, and I like it. That's, I got to tell you, from product innovation, okay, this is such a double-edged sword. So they're going to have Monday, Wednesday, Friday expirations for all of these products. Those of you that are in the DTE sessions, today is actually session number 2. So when I say DTE, okay, we have a mastermind. It's a 4-week mastermind followed by a 3-hour live trading session. I kicked it off last Thursday. Today is session 2. Okay. By the way, if yeah, I totally am drooling. I'm actually relatively excited about this because I've already figured out like all the different strategies and so forth, and it takes away from the need to like, and if you guys to see like on 0-DTE, instead of trading spiders some days, I like to trade like an NVIDIA. And instead of having to like, wait until later in the week to be able to take those positions, every day, okay, every single day, and it's going to change the nature of the beast even more. When you see like volumes, option volumes, okay, are huge right now. Wait until they have Monday, Wednesday, Friday expirations. It's going to be absolutely ridiculous. And for those of you that don't know this, but the more expirations you list, okay, the more solidified expected moves become. Why? Because you have skin in the game now, like pretty much every single day. And the more skin you have in the game, okay, the more we're going to follow like a $3.82 expected move, okay, because there's billions being traded on that. And the more skin in the game, the more we're going to move, okay, to those expected. It's going to get good. It's going to get good. Earnings flips are definitely going to be opened up as well. Yeah, earnings based butterflies. Okay, it is on, but it's only a handful of products, but it doesn't matter. Those are the only things anybody trades anyway. Like, look at the XLE. We'd all agree everybody knows the XLE. Apparently, nobody's trading it. I'm going to go to the XLF. Everybody knows the XLF. Yeah, nobody's trading it. It's done 8,000 contracts today. You want fries with that? Okay, serious. Nobody's trading it. Then you go to something like Apple. Apple's even a pile of crap right now, only 123,000 contracts. Okay. Whatever's in play though, like Tesla, Tesla's always in play. Yeah, 235,000 contracts. Meta today has been hot, 200,000 contracts. Okay. Everything that you're seeing today is a concentration of firepower, concentration of liquidity. All right, I got a couple of topics I got to get to. And I want to get to these because today is it's Thursday. It's a little bit of a shortened day. I'm feeling a little slow today. Everybody in my house, okay, is diseased, and they're taking me down with them. I feel okay. I just can't move. I'm so tired. Okay, I don't get tired, and I can't move right now. And my daughter is infesting the entire house with a little influenza A. It's good stuff. We went and we had to bring the 16-year-old girl to the doctor yesterday, who's actually a friend of mine. He's like, why do you bring me this? I brought my daughter to the doctor, and that's actually what he said. Why do you bring me this? And I'm like, this? He goes, 16-year-old. He's like, no, nobody wants any of these. Okay, nobody wants that. By the way, there is some data coming out. Okay, there is data coming out in 5 minutes. Don't freak out. Okay, nobody cares, but it is going to light that fuse again for this marketplace. So just be aware that data is coming out in about 5 minutes, and we do have Tony Rago coming in here in about 5 minutes. So yeah, yeah, the flu is apparently is nasty this year. Okay, please don't start with the okay. The flu shot didn't work this year. Okay, not that I had any, like everybody always gets into the flu shots and stuff. Okay, it gets crazy. I don't need to hear it. I'm going al natural. At least I'm not giving an answer like Aaron Rodgers gave. Is he finally done? Okay. By the way, if Aaron Rodgers ends up in the broadcasting booth, I'm out. I had enough like Tom Brady, which I have to tell you, Tom Brady got pretty good this season. I'll give you that. The broadcast booth, Tom Brady got much better in the broadcast booth. I will give you that. By the way, if he didn't own part of the Raiders, he could have played for Denver. That would have been great. Come on, join Denver in the, AFC championship game. That would have been great. I like the idea. Um, go to the gym, infest everybody there. Okay. Don't tell anybody. Okay. I could go sit in like a sauna for a while. I could use that. That would be good. Uh, Romo, okay. Romo doesn't even know his own name half the time. Listen, Romo was never the sharpest tool in the shed, ever. You get what you get. He's the last of the quarterbacks that took a lot of hits in the head, okay? And he's pretty much just still standing. I'm okay with that. It's good stuff. All right, no more football discussion. It's Thursday. There's not football till Sunday. There's only 3 more games this year. Very notable that the bonds continue to kind of fade a little bit. My probably single largest concern economically and moving forward, if you want to not talk about today's trade, but you want to look forward, look at the bond market. Continue to watch the bond market. because Scotty B at the Treasury, which I made a comment about Scott B at the Treasury. And by the way, this is not a political comment, but I've said this before. Scotty B running the Treasury there has forgotten more about bonds than any of us will probably ever know. For those of you that do not know this, okay, our Treasury Secretary, okay, is and has been one of the greatest hedge fund managers of our era. People just didn't hear him. He kind of flew under the radar a little bit. He made billions, okay, and heavily, heavily in the bond market, but he's also an avid short, which makes him a really interesting candidate as Treasury Secretary because nobody understands the dynamics of markets better than someone who has actually taken dramatically large short positions in markets. And the commentary about the Treasury recently it's getting more and more interesting because they're initially going to try to control interest rates through rhetoric, okay? But I think they're going to have to go in there. Look, I think that the Fed chairperson, okay, completely changed my mind on this one. I'm not sure who the Fed chairperson is going to be. Everybody thought it was going to be, was it Kevin Hassett, whatever? I'd throw that out. Okay. I don't think they're actually going to bring in the Fed chairperson we think they're going to bring in. I think they've actually changed their minds, and they don't have to tell you that. It's going to get very interesting, though, expressly inside of the bond market. And the reason I'm bringing this to your attention is we broke, okay, in the bond markets earlier this week. We rallied back up at the fade over here, okay? The volume is a little bit lower. The interest rates, though, appear right now, okay, they look like they're going to explode. I think we could actually be back at 4.5%, and I will maintain a short position in TLT. And again, I wanted to build this position over a period of time. It's up some 16%, but I only have a two lot. A two lot's not necessarily like the smallest trade in here. I'm basically short an $87 product. If I get the opportunity, I will, in fact, add to this position. Again, I wanted to build the position, a little slowly and add over time. So head in the game right now. S&Ps are about to actually get a little bit of a news bump in here. We're also going to have Tony Rago coming in a moment. As we're actually waiting for that news, I'll watch that. A couple of more topics I want to hit and look for some trade opportunities and shop a little bit as this day kind of goes on. All right, it's a nothing burger in here right now. So just taking a quick glance. First of all, XLF, zero-DTE recap, okay? Yesterday, I did, in fact, put on a trade. I put on a trade. It's not a true zero-DTE, had a couple days to expiration, but I like to recap everything that I do. And I like to take you through kind of the thought process on here. This is a trade where I bought for 50 cents, I sold for 55 cents, okay? It's a wash. I didn't make money, I didn't lose money. Ironically, that's happened a couple times lately. The trade in the XLF, okay? I shorted, okay, XLF when it was right here. My logic was very, very simple, that it was still a ridiculous kind of rotation going on in the marketplace, okay? And if the rotation changed course, the XLF was going to sell off. The XLF absolutely did sell off. I was anticipating it to sell off more. And then, okay, I got tacoed. So, and that's okay, because in the end, what happened? All right. And then we faded right into the close. I got out right here. I made 5 cents, period. I was looking for a much bigger hit on that trade. Okay. But, yeah, see, Roger got in at 49 cents, out at 72, and that's okay. So if Roger got out at 72, he got out right here. Okay. I mean, I can tell you the exact time you got out, saw some of the trades actually going through. I didn't exit because I was looking for the markets to fade means sell off. I was looking for the markets to fade into the close. But I wanted to give a detailed recap, and I will give detailed recaps on all the zero-DTE style trades that I do here at Theo. I like recapping them, whether they make money or lose money. I don't care. Like it's a learning curve, okay? And I'm just gonna continue to kind of hammer that into you that it is a learning curve. And when you have trades that are what I would term a scratch, and this is a scratch. Scratch just basically means put it on 50 cents, took it off 50 cents. When you scratch and you go through the hell that we went through yesterday, you realize I was bearish in a product, okay, that literally in a couple of seconds exploded to the upside. The rule, okay, you sit tight. You don't do anything. Okay. There's no irrational move. Oh, I gotta get out. I need a stop order. You got to stop with that crap. It's one of the things like I'm going to talk about today's zero DTE mastermind. By the way, if anybody else, I think we could probably fit a few more people in there. If anybody else wants to be in there, uh, it's I'll post the link right now. Post the link into the chat. Okay, it's in there. Or if you would like, put a 1 in the chat and I'll have the guys actually reach out to you ASAP. You'd be jumping into session number 2. Okay, literally you'd be jumping into session number 2 today, but the zero DTE, mastermind just got infinitely more interesting because now they're adding more option products for zero DTE. I mean, like, they just added, the king of them all, to zero DTE. So yeah, you better believe things just got a hell of a lot more interesting. Like zero DTE, it is the market, okay, but now it's going to be a multitude even more. Yeah, so I am going to bring Tony on here momentarily. Uh, all right. Oh, there we go. There's Matt. Matt, I was not sure if you were available. Matt will actually help you guys out in chat. Thank you, Matt. I didn't know you were listening. By the way, the S&Ps have slipped a little bit here. Tony, are you there? Okay, Tony, are you there, Tony?
I am here.
All right, man. You didn't have your camera on. That's the sign, right? That's
I'm
the
here, man.
sign.
I
Oh,
was
how you
letting you
doing?
finish
Oh, the
your
zero
zero DTE
DTE.
discussion.
Yeah, the zero DTE. I don't know if you saw the announcement. I mean, we were talking about it this morning in our TheoTrade. We have a little chat off to the side over here. All the major, players are coming out with Monday, Wednesday, Friday expirations. So it's totally changing the nature of the beast. There's so many other trade opportunities in there. Now I feel like I can easily trade zero DTE every single day. Like now I can actually come into chat and I'll trade zero DTE. I don't have a messaging system that's like fast enough to get that crap to people. Like it's similar to what you're doing, but
Yeah, it's
yeah,
quick.
it is like
It's not like, it's not a Ronco trade. You can't just set it and forget it kind of thing.
yeah, even like today I'm looking at like Meta. I'd love to actually place a position inside of Meta because if the S&Ps continue to come off, Meta's going to get killed today. Oh, I like it. I like it. I like it. I like it. I'm just shopping around looking for a couple of trade opportunities today. There's some earnings today, but again, nothing too crazy. I'm surprised though the Nasdaq has pulled back as much as it has. But so as I was talking earlier, and I'll bring you up to speed because I know that you're always on in the futures room the first hour when I'm on. So we don't get to meet too often anymore in chat.
Yeah.
The entire thing, like I am so tired of the bull bear discussion. I was talking about this earlier. Um, the entire marketplace hinges on literally, and I've drawn this up here like numerous times, specifically today, but okay, the entire marketplace, 68.50, 69.50, okay? I mean, really since like October timeframe. This is a 90-day, 2-hour chart. There's a glimpse higher, a glimpse lower, but we're just basically pinging back and forth. But a $7,000 product pinging in $100 range is, arguably the most dangerous thing that we've seen in recent history in markets. And the reason it's so dangerous now versus like, was it different from any previous years? Because of zero DTE, because you're just taking this
Yep.
ball of risk and rolling it forward and rolling it forward and rolling it forward. And every day that we're in this range, okay, it's literally exponentially greater amounts of risk pile into the exact same range. The gamma risk ball here is just, I mean, yesterday was a pretty big day yesterday. We did 75 million option contracts yesterday. The day before that, we did 68 million. Last week we were up to like 81 million on last Thursday, and last Thursday we didn't even do that much. It's rallied a little bit. 81 million option contracts. 81 million option contracts. It's absolutely ridiculous. It's so, this is a time where please, like people, respect this. I mean, this is not for Tony, but respect. Keep your positions okay close to the vest. Be a little bit under allocated. Come into this a little bit under allocated. If you have okay significant 401ks, IRAs, uh, either mitigate part of the risk, close part of the risk, hedge part of the risk in any way, shape, or form. It's not. I'm not quantifying that we're going to go down. I'm telling you, okay, in a range this tight, nobody has a good feel, okay, and to see a wild and woolly move to the downside, 2% ain't it. As I said, even a 5% move over the course of a week means nothing. 10%, but 10% on a $7,000 product, again, it's a 700-point move. If the S&Ps were sitting at 6,000, 100 in 3 or 4 days from now, you can't be surprised. Okay. And in a move like this, okay, the risk right now is not equal. And what I mean by that is there upside potential? Yes. Like, let's get crazy. We can go all the way to 7,200. Okay. The downside, though, as I said a moment ago, okay, the downside, we haven't had a 10% correction. I mean, look, when I want to draw downside on the screen, I have to actually drag the damn chart out. Okay.
Yeah.
Like literally, that's how your risk profile looks right now if you have a portfolio. Upside, okay, by the way, I don't think 7,400 is even doable. Okay, and in all honesty, if I drew this right now, I think that this is reasonable in this window too. Let's talk about a window to like March. 7,200 to the upside, okay? I would say 6,200 to the downside. That would be like a risk reward profile, giving you just about a month in time right now, which is wild.
Yeah, that's
Disproportionate.
massive.
Yeah, but disproportionate risk rewards are where you can make a lot of money, and it's like I'm not trying to bear everybody up. But you can make a lot of money right now in a disproportionate risk reward. Again, anybody that wants to go to the DTE class, Matt's in the chat. He's going to take care of you guys. My zero DTE class starts in 50 minutes. Tony, I gotta go rest a little bit. I hope my whole house is coming down with the flu. I'm
Oh, bummer.
I'm half in the bag right. I'm fine right now, but okay, it's creeping on me, man. It's creeping
Where
on
are
me.
you? Are you in Scottsdale?
Yeah, yeah.
Okay.
So, and I got 2 kids down. Nobody's
Because
nobody's going to school. It's a crap fest in there, man. You go back into the main house. There's blankets everywhere. It looks bad. It looks bad. Okay. It's bad when my girl, she's like, I won't go to school. All right, I'm going to turn it over to you.
all right.
I'm going to go get ready for zero DTE.
Appreciate it. Enjoy. Have a good one, man. And drink some more Red Bull, dude. Get caffeinated. All right, what's going on, everybody? NQ is just it's hard to trade.